China's trade war hit economy set to slow for seventh straight month in December. China's economy slowed for a seventh straight month in December as the trade war with the United States, subdued domestic demand and decelerating factory inflation combined to undercut growth, according to a Bloomberg economics gauge. The Bloomberg economics gauge aggregates the earliest available indicators on business conditions and market sentiment. The data suggest the government's stimulus approach and the trade war truce with the U.S. have yet to have much effect on the nation's growth trajectory. The data signals that activity is continuing to slow, with uncertainties in global trade and sluggish confidence still the major constraints, said David Chu, economist at Bloomberg Economics. China's leadership last week pledged more support for the economy in 2019, indicating an increasing sense of concern in Beijing over the economy and stalling growth. Even with the current 90-day ceasefire for the trade war agreed on December 1, there is still no guarantee that there will be a breakthrough before the start of March, when the current truce is set to end. The first official Chinese economic data for December, the Purchasing Managers' Indices for the manufacturing and non-manufacturing sectors, will be released on Monday morning in Beijing. The manufacturing gauge will probably be unchanged at 50, the dividing line between expansion and contraction. Before November, the last time it was so low was mid-2016. The non-manufacturing gauge, which covers construction and services, is forecast to slip slightly, according to the Bloomberg survey. China's manufacturing companies are already under pressure with output growing at the slowest rate in a decade in November and factory inflation decelerating. If the current trade talks fail, higher U.S. tariffs would further damage their prospects. If the current trade talks fail, higher U.S. tariffs would further damage their prospects. An index of business confidence among small and mid-sized enterprises maintained by Standard Chartered was unchanged at 54.7 in December, and the outlook is bleak as downward pressures continues to mount, according to Shen Lan, the Beijing-based economist in charge of the bank's survey. Data from China's major trading partners supports Shen's point about waning external tailwinds. The weighted average of the flash PMI readings of nations including the U.S., the European Union and Japan moderated for an eighth straight month in December. Though still in expansion territory, it was the lowest level in 2 years. Source: https://www.scmp.com/economy/article/2179796/China's-trade-war-hit-slow-7th-straight-month